Okay, I cannot stress the importance of why you want yourself, if you're shopping for a home, or if you're a real estate agent listening to this, why you want your clients working with a certified mortgage loan officer versus a regular Jane loan officer. There's a big difference, and statistically, less than 1% of all the loan officers in the U.S. are actually certified mortgage planners. So let me show you. This is going to blow your mind. We had a client that came to us. I don't want to show the credit report, but basically this is what their credit situation looked like. They had 2 mortgage loans that you'll see here. They had a student loan. They had 2 other student loans that you'll see here. And then they had all of this revolving interest debt. And revolving interest works totally different than installment loan interest. Revolving charges you every single day, and usually they're at really high interest rates. That's why that snowball of your credit card debt feels like it's impossible to get rid of. So what's really important is that this client came to us and said, I want a purchase price of $315,000. We're going to take our equity and we're going to put 20% down because my parents always told me to put 20% down on a mortgage so we don't pay PMI. But this is her debt portfolio. So I said, okay, well, as a certified mortgage planner, my #1 job is to help you obtain the American dream of owning a home, but I want to help you be debt-free and mortgage-free as soon as possible so you can actually enjoy retirement without debt or a mortgage, which very few Americans do. So you'll see that putting 20% down is $63,000. She's actually expected to walk away from her house after she sells these 2 mortgages, or the house, then those loans will go away. But she's expected to walk away with about $74,000. So I said, okay, let's add up all your credit card debt. That's $52,000. Let's add up the total amount that's going out of your bank account every single month. It's $1,800 that's going out, and over half of that is to interest, to the bank, throwing away, makes me vomit. So I said, why don't we take some of this $63,000? This might mean you only put 5% down, but mortgage loans are the cheapest money you can borrow, literally the lowest interest rates that you can borrow, and they're tax deductible. So it's kind of like good debt. Yes, that sounds like an oxymoron, but you could take this $63,000 and wipe out literally all of this credit card debt, which is going to save you $1,800 a month. And again, half of that is being thrown away. You might as well give it to me or give it to somebody else. Don't give it to the banks. Let's wipe this credit card out. It's going to jump your credit scores up because now your balance ratios to your credit limit will be astronomically down. So what? You put 5% down on the mortgage. That debt that you're borrowing is at a lower cost. We're going to save her $900 a month because we're lowering her total debt. Then imagine what you can do with that $900. She doesn't have any kind of life insurance. She doesn't have any kind of retirement account. So if you start saving $900 a month today to fund your retirement, and this lady will be what I call in the Million Nerd Club because we were strategic about the money. I know that sometimes we're programmed to put 20% down, 15-year note, 30-year note, but you have to speak with a true certified mortgage planner so that you are maximizing and being strategic about your money. So I just wanted to give this example. This is really exciting to me that we get to knock all of this debt out. So happy for her. Literally in 30 days this will be gone. So just thought I'd pass it along. Enjoy. I'd love to help you or your family or your friends. YourMortgageNerd.com. Bye.